Ladies and gentlemen, welcome to the SoFi
Alternative
Weekly.
Asset Weekly.
You're not going to get it every week.
I just did.
Tevis is already starting out being extremely giggly. Expect more from him. Just put a lot of memes in the chat and he'll go off. It makes up for like half the content on this SoFi Weekly is just Tevis laughing. Guys, how you doing?
Good. Been another good week.
Yeah. A little bit of news too today I wanted to talk about with Kathy Wood, little Anthony Noto. But Steve, how you doing? I haven't seen you in a bit.
Great.
You sound it, man. You didn't buy enough Pokemon cards, or what happened?
Is it ever enough?
What?
Is it ever enough?
I don't know, man. I don't know how your portfolio is doing.
Doing pretty good.
Pokey dividend streams. Okay, so there was a little bit of a podcast that happened this week with Kathy Wood and Anthony Noto. They got to sit down, talk about, their business relationship in the past, what they're doing now, Kathy investing in SoFi stock, and also why SoFi thinks that they have an advantage that no other company does. Has everyone on the panel seen this podcast?
Yeah.
I've seen clips. I haven't been able to take a look at the full thing. But I've seen a couple of people talking about it online and just snippets of quotes that have been taken. I'm planning on watching the whole thing on the weekend, though. So I'm really interested to hear all your takes.
Yeah.
They should have went longer. They cut it off at the wrong time.
Mm-hmm.
And they should do part 2 because they ended on what is probably the most important thing for the bull thesis.
Mm-hmm.
Yeah.
And that was?
The AWS of FinTech.
Yeah. Yeah, they just started talking about it. It was, if you haven't listened to it yet, it was good. It was, recounting the history of SoFi, history of Noto, Kathy Wood and Anthony Noto's shared history. I actually didn't know that part. And it just, if you've been in a stock a while and you've it's easy to forget some things. So some of those, I was like, oh yeah, that's right. So there's many of those moments. And it just was neat to see the development and formulation of Anthony Noto's thought and vision for SoFi being a top 10 financial institution, not just bank, and the whys and the hows of crypto and everything. It was a good episode. But yeah, Steve is absolutely right. They basically like, well, we're just about out of time. How about just a mention on Galileo and the AWS of FinTech? And they're like, okay, done. It's like, dude, what are you doing? It's just getting good. So
Yeah.
Hopefully episode 2. But alternative Matt in the comments, not Mad Money, but the other Matt, not the other Matt, just the other Matt. He had a point that Kathy Wood probably has a crush on Anthony Noto. Because she was very bullish, not just on SoFi, but on Noto himself. And there's a neat shared history there. And then she keeps buying the stock just like crazy.
Yeah.
Well,
I think that's the thing that I wanted to touch on as well is like, I heard the feedback was that they didn't touch on the tech platform enough. But the positive is that Anthony Noto doesn't do a lot of podcasts. And a lot of his remarks are scripted remarks. They're prepared remarks. They're stuff that's been vetted multiple times by multiple different teams of people. And so to have him on these podcasts talking about SoFi, like I know he has his own podcast where he interviews other CEOs, but to talk about SoFi specifically, I think that's something that we as a retail investor community have been really starving for. I mean, selfishly, like we want him obviously to come on this pod, but if it's Kathy Woods, then that's definitely, good as well because of the backdrop, because of the fact that she is buying so heavily, because of the fact that, this time last week, essentially, or 2 weeks ago, Kathy had about 2.5 million shares and now she has over 8 million shares. And that's it's a heavy accumulation in a short period of time. Not to mention the fact that ARK Invest name dropped SoFi like 3 times this week when they were talking about the ARK X portfolio and then also promoting this podcast multiple times. And so it seems as though she's definitely warming up to that. I mean, she called it like one of the leading digital wallets of the future, something like that. Obviously, very bullish sentiment. But the critique, and again, I have not seen the full podcast yet, so I can't have a first-hand knowledge. But the critique that I was seeing was that it doesn't seem as though Kathy is really leaning very heavily on the AWS of fintech aspect to form her bull case. It was more like gaining market share and that one-stop shop.
They're not leaning on. She's not leaning on it at all. Like there was one point in the podcast, Tevis, where Anthony Noto is talking about the sort of data moat that they're starting to create because of the amount of transactions that they're dealing in, because of all of these things, how AI is going to forward that. And he's talking about, using the Risk platform to help with that. And Kathy Wood asks, "Oh, what platform are you using to help with your fraud detection and risk?" And then he had to explain, well, SoFi has a white label process or a white label technology called Galileo, and we use our own technology. And that was just surprising to hear from someone that has like 8 million shares or whatever.
Do you think that was a genuine question though, or do you think that was just for the sake of?
It was a hunch. She said, "Oh, okay."
Okay, well, I can't. Yeah. I can't defend that.
It was not like open up the question to allow, like, I don't know. You have to see it, but Roy, you saw it. Is there any way to think any differently in that?
Yeah, I think, and this is just supposition, that a certain amount of ARK Invest, like, it's there to attract attention. Like that's why they do, the interviews. That's why she goes on CNBC and everything. You want people flocking to your fund. And so I think a certain amount of their allocation is going to go to retail heavy stocks that people recognize and love. So of course they have the good old cult stock Tesla, and they'll trade in and out of that, but they'll always have some. Palantir is one that they dumped for a while, but they're back to it. And Palantir was at one point, I think, either the only name or maybe one of two only names that were across all of the ARK funds. And they have not bought in as heavy as they were before, but SoFi seems to be that too. So when she, in that interview, I think you're right that maybe she doesn't know SoFi. She certainly doesn't know SoFi as well as the three of you guys, maybe as well as me. And that's not great for somebody that owns 8 million shares. But I think that possibly the reason she bought it was the trust level in Anthony Noto, which is initially what got me to buy in. And then it's retail heavy, and it attracts attention. It gets that focus. And so I think there's an element of that. Could be wrong.
I think that you could cover it from both angles if you want to have like a more bearish take to say, okay, well, she didn't talk about the tech platform. But you could also, I mean, just me, I guess, with rose-colored glasses on, a little bit biased, I'm saying, well, okay, she didn't talk about the tech platform. She obviously, from Tanner's comments, doesn't really know the effect to which the tech platform can add a multiplying aspect to SoFi's growth prospects. And
or
yet,
just what services they offer.
Or just what services they offer. And yet, despite all of that, she's still buying hand over fist. I mean, B-Dubs threw up this comment to say that, it could be the fact that she's accumulating, that she doesn't want to promote these types of things. And, sure. But I even think, like, even if we give her the benefit of the doubt and just say, okay, well, she's actually naive and she genuinely doesn't know about it, or she hasn't done that much DD or that in-depth DD, the fact that she's still buying hand over fist consistently and building this up to be a larger position without the tech platform, like, you could spin that to be even more bullish than her having known about it in the first place.
I love me some B-Dubs. I think that the only thing that I think where that doesn't come into effect is the fact that why even run a podcast at all? Like, so to downplay one portion of the company to say, hey, don't accumulate because I'm accumulating, which even Kathy Wood's strength in because she buys a name that it's going to go up, I don't even believe in. But why even run a podcast at all talking about all these great things that SoFi is even doing in the first place?
Do you think it's just to promote ARKX, honestly? Because, like, I think the comment was brought up, like, you're talking like ARK is a one-person company. And the fact of the matter is that, Kathy is just the managing director of that fund. But even for Tesla, for example, like the actual analyst knows way more. In that case, I think it's Tasha. And then there's Winston, the other analyst I think he's the one for fintech. These guys go 10 layers deep. So Kathy doesn't have to. That's literally their job, their function in that organization. But the fact that they had Anthony Noto on the podcast now just makes me think, just stream of consciousness, thinking out loud. Do you think it was more so to promote ARKX being on SoFi, or because she has 50 stocks that she covers? They're not all on their ARK podcast.
Yeah, I mean, I'll pass this over to Steve in a sec, but I do think that's what she's doing, right? It's sort of self-fulfilling for her. But I even think there was a moderator on the podcast that was asking a lot of the questions. I have no doubt that he is doing potentially more of that in-depth research than Kathy is. I'm sure she has a way higher role in ARK than doing individual research like that on some of her smaller names right now. I'm sure she's focused more on the bigger names that she has in the portfolio. But Steve, what do you think? What were your other thoughts on the podcast?
I think anybody who's invested in SoFi or is interested in SoFi as an investment should listen to it. Overall, it was a very good podcast. Anthony Noto did a phenomenal job explaining his thoughts on it, competition, what companies in fintech he thinks will continue to do good. He didn't bash anybody. He said there's going to be several winners that take most. And he was very articulate the way that he always is. I just was not happy that there's no time limit. This wasn't a episode on CNBC or on Bloomberg. There's no time limit. For them to stop it right at the particular metric of an hour or whatever it was ridiculous. That interview could have went on for another 20 or 30 minutes. And
well, it could have been a Noto's time, like respecting his time.
Whatever. I mean, it didn't seem like Noto was looking to stop at all. It really didn't. I mean, you guys watched it. It seemed like, and I've never watched, I can't say never. I may have never watched a previous ARK Invest podcast like that, but it seemed like they do them for that specific time frame. From the comment, it did seem like the analyst knew much more about SoFi on a granular level than Kathy did. And look, Kathy's known of him for a long time. She knows his background. She's probably seen the slide deck and obviously has had conversations with him. They're business partners now. She probably likes what she sees. Her analysts probably say this thing's the real thing. I'm not surprised it's in ARKF and ARKK, and I think it's in one other fund. But I wouldn't care if it wasn't. Yes, it's great. Exposure is great. Noto getting airtime on podcasts or TV is great because he does a really good job of explaining things. But I don't care if this goes back down to 6. I don't care if it goes to 15. I'm going to buy more. You know what I mean? Like, this is something, unless the investment case changes, I'm going to continue to accumulate because I believe in the long-term potential of this.
Yeah. Look, there's two things I want to mention. One of them is that we're dedicating a lot of airtime to this pod to Kathy, and I think she gets an outsized mind share from all of the SoFi retail community, when in fact there's actually a lot of more prominent investors that are buying more heavily than Kathy is.
Well,
we talked about, which we can get to that. Sticking on the interview for a second and just thinking critically about it, just trying to sort of put one and one together. I think that, and let me know what you guys think, but I would venture to guess that ARK was the one who wanted this interview rather than SoFi, simply because, it was split at that 1 hour mark. And if you think about, okay, what is the desired outcome of an interview like this? ARK Invest right now has it up on their YouTube channel and they're promoting the heck out of it. I mean, they've made several tweets about it. Anthony Noto has also tweeted this thing out. And yet, despite all of that, it only has about 11,000 views. And so if you're thinking about max reach with YouTube as a medium, then ARK Invest is not like the person to go to. And so it leads me to believe that SoFi was not, in fact, the ones who asked for this interview. It was ARK, so that they can start promoting SoFi more as like you know, a company that they're holding or are bullish in.
If I could add to that, I didn't even know. I posted a review on this, and I didn't even know that it was uploaded to YouTube at the time. It was uploaded originally to Spotify, so I don't know what the numbers are on that, but that's actually how I found the podcast. So maybe it has a little bit of reach, but yeah. There were, before we get in, because Tevis, I thank you for bringing that up, because there's amazing other names that I really want to talk about. But there were a couple of really exciting parts to this podcast that I don't want to skip by, because they were much bigger than Kathy not knowing the risk platform. Anthony Noto talked about how he suspected that the competition for what he called like horizontal digital banking, being a one-stop shop, would have been much stronger than he would have thought. And that he was really worried about Goldman Sachs at the time, with their Marcus platform. He had a bunch of names that he was really worried about. And then he said, they've all failed. And part of the reason why that happened is because they had, what in his terms, 9+ larger revenue streams that they could just lean back on. And so they don't have the startup mentality of burning the bridge behind them and having to survive on this island. And one of the things that he said, I just want to read the quote here. He said, "I know this sounds egotistical, but the facts are facts. We are the only ones operating with $2 billion in revenue, GAAP profitable, with our long-term margin, with our long-term margin expansion and tangible book value growth." And then he said this like a little bit, there was a little bit of time between this. He said, "I just thought it would have been a longer war." How crazy is that? Like as if he had already taken home the championship. And yeah, I don't know. He spoke about a lot of other fintech competitors as well. He brought up Chime, Dave.com. He had some colorful things to say about Robinhood, about Affirm, about Square, like a Cash App. It was an area in which we don't really get to see him often.
But even that in isolation, Tanner, as someone who didn't watch the podcast, just hearing the snippets, really interesting to sort of peer into Anthony Noto's psyche around who he views as SoFi's core competitors. Dave, Chime, the Cash Apps, all of these little neobanks. And yet there's a massive discrepancy, because the street, all of these analysts, who are they saying? They're saying Bank of America, Wells Fargo, JP Morgan, all of these legacy players. So
let me clarify real quick. He actually does say the only competitors that he has are the incumbents, saying that there will be category killers that will survive. And then he talked about Chime and all those. So he's saying, we have different demographics than Chime and Square and all those. He did talk about those, but he did say it's SoFi and the incumbents, and that's it. And he thinks that the small banks will die if they don't incorporate SoFi's technology.
Yeah, but so just on that quote, though, I thought this war would be longer. It's just, again, yeah, I don't think anybody's denying that SoFi has this duality in terms of their competition. They have the legacy players and they have the new incumbents.
Yeah.
It's just what he's choosing to focus on, to say, okay, the war is over essentially, and it's just SoFi and maybe one or two other names against the legacy players left. Like, even that is interesting to me in isolation, because like, if you have this entire behemoths and you're trying to disrupt the banking industry, how would you view it as, okay, the war is over because we've beaten all the new incumbents out,
Yeah. No, go ahead, Roy. Sorry.
Yeah, I was just going to say that it shows the perspective of Anthony Noto. Hitting that GAAP profitability was very important, and having their main business segments actually fire up. That gives you the flexibility to do a lot of things. So he talked about, when you're starting up, you're burning cash, you're operating things at a loss for a while, and how they kind of laid out things very aggressively initially. Now that they're GAAP profitable, they're on easy street. They can start up something. They don't have to have it work right away. It's great if it does, but they have a lot of flexibility just because they're firing on all cylinders. So the time to stop SoFi and compete with them successfully was a year or two ago. Not
Sure.
right now. Right now, it'd be so hard for any new player. And SoFi also is not yet the size of that JP Morgan. It's not anywhere close, where you just kind of don't even pay attention to the Nats. Like, they still pay attention to the Nats and they want to smash those, except for the mom and pop banks, they want to convert them over to Galileo. So I just loved hearing that battle plan and strategy. And I see it playing out. I see it happening. Stock price may not be aware of it yet, but that's our alpha.
Absolutely.
There was another part, Tevis, that you really will love to hear, where he's talking about how they caught a lot of flack for becoming a SPAC. And he said, I've been a part of like 100+ IPOs at my day at Goldman Sachs. My large expertise in IPOs is what made me know that we needed to SPAC because we needed a ton of capital up front in order to go after a banking license. And so he said, SPACs might not have been for everyone, but it was a perfect solution for what we needed. Very unique case. And I don't know. It's not everyone gets to hear that. He's never open about that, right? You only just see SPAC, and then you compare it to all the other companies who have SPAC'd on, and it looks like you're in a basket with bad names. But very particular.
This is a guy who was the guy at Goldman.
Yeah.
He's the guy that called eBay. I believe he called Amazon.
Mm-hmm.
He called Google. I mean, this is what he used to do. And you either believe this guy's capability and this guy's expertise, or you don't. And he has one of the most impressive track records from a CEO. And he knows what is involved in either IPO or SPAC, or how to go public, and the best way to take something to the market. And he knows what people are looking for. So, like I said, you either trust him or you don't. And it's getting a little tiresome that people keep bringing up the same things about the negative bear case. It's like, this is either going to work or it's not going to work. But show me a company that is a true competitor. Show me somebody who's going to come out of the woodwork and compete with SoFi.
Yeah.
Because we know that Robinhood is going to do what they do, and they're going to be probability, they're going to be okay. We know that a firm, if they stick with their metrics on credit losses and everything, they're probably going to be okay. I mean, look, layaway's been around forever. Okay.
Yeah.
Paying with payments has been around forever. Like Noto said, there are going to be other things that grow and do well. But the real question is, can another neobank come out and do what SoFi has done and grown into what SoFi has done? I mean, theoretically, yes, but is it probable? Like, that's the thing. Is it probable? If it's a new bank coming, not new bank that Tanner owns, but a new bank, new cloud bank, or SoFi, and somebody who's going to go with the two. SoFi's already got the brand recognition and is on its way to being a household name. Like, you got to do so much to compete with them. I just don't see it.
And the macro.
So
it's changed. It's really tough. Go ahead, Tevis.
That's what I'll add. I mean, I think Steve touched on something very crucial there. It's people have to trust Noto. And I know this quote was pulled out of the podcast where he was saying something to the effect of, our biggest challenge right now is to build that trust. And once we can build our trust, not only with, our users, with the market, with, the wider landscape, then, we're in, for the win, essentially. We're a challenger in that race. But building that trust, especially as a new incumbent, is the hard part because you have so much to prove. And I think that, to Tanner's point, the best CEOs out there, and it's something that's very emblematic and consistent in the market, they have this ability to see the future, whereby, let's say, we see an event happening today and we might think it's peculiar, or we might think it's, bad, but these CEOs are playing 3D chess. I mean, they're playing, far in advance. So in the case of SoFi, the SPAC was an example of that. The MBA partnership, from all of the stuff that we've been seeing in the background, that's been in the works for months. That's probably been approved for months. And for them to announce it, right before All-Star Weekend, so many of these things, the bank charter specifically. I remember, when all of these CEOs sold at the very, very top of the market, and everybody's like, what are they doing? Elon's selling, Jeff Bezos is selling, and it was October 2021. And then immediately the market, dipped. I've seen multiple examples of Elon doing this with Tesla, where he does something and you're like, this is so stupid, but he's already made the decision in his brain.
Yeah.
And he's just sort of, testing it with the market to see, okay, what's the sentiment out there around that decision? For him, like I remember when he sold to shares to buy Twitter, he put out a poll, and then whatever, the poll just validated the result. But we realized that he couldn't have taken that result in the moment. He had to have taken it weeks before due to the regulatory issues and all that. So my point is that really Noto right now is playing in the space of 2025, 2026. Those are the partnerships that he's working on. Those are the initiatives that he's actively pursuing. Those are the kinds of conversations that he's having. Why? Because 2024 is already baked in the cake. Like that is already done, sealed, delivered, and waiting to be announced. And the rest of us, we can't see that far ahead. And we're thinking, okay, well, when will SoFi, hit 1 million members or whatever, even though they already have internal projections that are different from what they're providing to the market. And so that's testament, I think, to the best CEOs out there, this ability to be more strategic and have that foresight. And Noto proves time and time again through these decisions that SoFi can achieve that. And that's what sets them apart. And so it really is a matter, Steve, of just building that trust and through consistent execution, continuing to convince the market that, hey, we are in fact a true contender and we're here to stay.
Well, what else does Noto need to do for the market or investors to trust him? That's my question.
And nothing out of the ordinary, just consistency. 2 quarters of profitability is better than 1, 3 quarters is better than 2, 4 quarters is better than 3, so on and so forth. So if they continue to beat, if they continue to be bullish on these calls, if they continue to be hopeful around their new business product lines that they're going to be releasing, geographic expansion, all that stuff, then over time, they will build that trust. Every subsequent quarter, they build more and more trust with their users. That's testament to the added members. With their brand, that's testament to the partnerships. And with their investor community, that's testament to, right now, one of my things that I've been sort of repeating over and over again is this base that's forming from an institutional perspective, which I'm sure we can talk about a little bit more. But more and more people are discovering the SoFi name. More and more people are doing their due diligence, and more people are becoming more bullish on SoFi. I don't care what the stock price, is saying today, because the stock price could well lag the company events by 6 months. And so I care about what's the sentiment like, what's the execution like, and what is the goodwill essentially that bakes into it every single quarter through that consistency of execution.
I think that's my biggest thing, and maybe I'm too bullish, but most companies in that position, in that category, in that environment, would not have made it out. So it's kind of hard to think that unless some huge scandal comes out, SoFi is not going to continue to grow, considering they made it out of the worst environment they could have been in. But you can't think of a worse environment for them at that point in time.
Roy?
Yeah, I was speaking about the macro earlier. Like, it's still not easy for any fintech startup. They're still not well loved mostly. Right now, like if somebody was trying to raise a bunch of money and get a bank charter, well, you can't really SPAC yourself. No one is going to do that right now at all. That ship is sailed. So if you're going to raise capital, you're going to do that. But the cost of raising capital right now is not cheap.
Yeah.
People write off any companies that are IPOing right now that don't look like they're going to be profitable. Like that's not happening much unless you're an AI stock or semiconductor stock. And so that's not happening. There's a lot more scrutiny on banks than in the COVID years where things were very lax, and they're not just handing out banking licenses. So it would be very tough for somebody to come as a new startup and compete head to head with SoFi. It's just they can't do it right now. The environment is not conducive for that. And so SoFi not only proved itself during, like Steve said, during one of the hardest environments out of any company that I've seen, and they did it with excellence. Now we've seen the results. they've kind of burnt bridges behind them, and so other people have to behind them build bridges and try to. It's just going to be very difficult for anybody else. There's still the large mega institutions ahead, but right now they've thankfully not really noticed what SoFi is doing or cared.
And there's one other thing that we never really touch on. We're about to start undergoing, and some could argue that it's already starting, the largest transfer of wealth we've ever seen over the next, call it 10 to 15 or 10 to 20 years. You have a very large transfer of wealth, and it's not just going down one generation. In some cases, it'll be going down multiple generations, because some will not just go to children, some will go to grandchildren also. Some will go to people that are of college age, et cetera, et cetera. And as that money comes out of large financial institutions, large brokerage houses, et cetera, you could have money going to a demographic that is more familiar and more inclined to put money in companies like SoFi or Robinhood. So you could have a very long tailwind of money coming out of those deposits from the large financial institutions at a quicker rate over the next 10 or 20 years. So that's something that we never really talk about, but it is absolutely a possibility.
And what's the estimates on that transfer? It's like something like 73 trillion or something, if I remember correctly.
Yeah, if you give me a minute, I'll bring it up. I have it.
Okay. Yeah, I do want to switch topic. Damien is posting little hints. Maybe Tevis can take over. Can you tutor me, Tevis?
Is this about the other people that are investing in SoFi?
I mean, yeah. Did you see the way they spell tutor?
It could have been about English King Dynasty. So
that's what
before we switch, I just found it. So before you let Tevis tutor you. So boomers, and you guys classify me as a boomer, which is ridiculous.
You're a boomer. Yeah, go ahead.
Half of the nation's wealth in the U.S. I mean, 19.1 trillion is in equities. So 18.9 trillion in real estate. The rest is in bonds and other types of investments. I mean, this is going to funnel down to Gen X and millennials. And you could have a respectable amount of these assets going into cloud first areas such as Robinhood or SoFi. Like it is absolutely a possibility. Who knows what's going to happen, but this is something that may not even be factored in, because it may really not start picking up for a little bit, but you got to think about this over the long runway for the future.
Yeah. Yeah. It's definitely a long-term tailwind for sure.
Yeah.
Okay. I'm jonesing to be tutored. Tevis, please.
How long did it take you to come up with that?
The second, the second that I said tutor me, give it to me.
I don't know if you can pull up this tweet. I think it should be in my highlights, but it doesn't really matter. Just from the latest 13F filings, if you check on Fintel or if you check on any of these websites that track hedge funds, you will see that many institutions are adding onto SoFi. And the main one that we're talking about is Cathie Wood's ARK Invest. But there's a couple of other prominent names that are adding to SoFi. One of them is Paul Tudor Jones of Tudor Capital. And another one is Jim Simmons of Renaissance Technologies, which is like the father of like quant trading, for those who don't know. I actually made a post about this and highlighted some of these names. And it's very exciting to see because, that's the other one is Matt Farley from Matt Capital. As we all know, Matt just bought SoFi today.
I didn't realize I was on that post.
That was a little tongue in cheek.
Is that the first time Matt has bought SoFi?
That is, we have convinced Matt to buy SoFi. He is now one of us. So
wow, I feel so much better now that Matt's in. I'm gonna have to buy
don't feel that much better, Steve. You'll text him afterwards and ask him what he sold. So
no,
you didn't, Matt.
Matt, I'm
I'm-
texting you right now. Look at your phone.
It wasn't Palantir, guys. I know that's what you guys are
Oh,
thinking.
dude.
Don't worry.
I was gonna say like, come on, dude.
Can you imagine? He spends a couple days with me and he does the flip. Oh my God, Twitter would be in a rage. Anyways. Anyway, so large institutions are loading up. I don't know.
I'm glad you can't show that.
I love it.
It's your contract.
No, it's my
these-
actual share Palantir.
Now, these funds, some of them are swing traders, and I get that. And some of them have owned SoFi before for brief periods of time. Like they've gone in on one quarter and they've exited their position on another quarter. But
I can't find it, Tevi.
it's okay. You can also go on Fintel and you can look this stuff up. But and you can see the ownership by month, for example. So for Paul Tudor Jones, you can see that he owned it a little bit in, I think, 2021. For a month, he flipped it, whatever. But this is the first month per this 13F filing where so many of these names are entering at the same time. Ken Griffin at Citadel Capital is buying, hand over fist for SoFi. And so while Cathie Wood is definitely the most popular name out there, particularly from what happened in 2020, that whole boom with regards to ARK Invest and innovative investing, growth investing in general, a lot of these guys, they're steady hitters, and they've been so for decades. I mean, Paul Tudor Jones is a legend. Jim Simmons is a legend. Ken Griffin, whether you like him or hate him, like he is one of the biggest out there. So they're all entering SoFi, particularly at a quarter after we've reported profitability. And this is why I say consistently, time and time again, every single video I have, that this is an inflection point for SoFi, because all of these previous years could have been behind the scenes building years. But now that we've hit that profitability, some institutions are still going to be on the sidelines because they need confirmation of consistently being profitable instead of it, could be a fluke. But some are going to see the writing on the wall and are going to jump into SoFi. And we're seeing that en masse right now with a lot of the biggest names out there.
And one of the reasons why it's a good thing that institutions are coming in, if someone's not too familiar, is that provides a lot of stability for the stock. SoFi has been very volatile. It's great for traders. For long-term investors, maybe not quite as good. So the higher the institutional investment percentage, usually the more stable. It doesn't mean that the stock can't move. So take for example, Robinhood, it's about 75% institutions. And it's like, just look at the chart from the last 2 weeks. Steve, hopefully, has been looking at it, but as a shareholder, but it's been really good, and it's a heavy institutional name. The great thing is, yes, Robinhood might come down and cool off for a bit, but because it's a heavy institutional name, a lot of those gains are here to stay. It's not going to come back to 11 or 10 or 9, barring something major and massive happening. Versus SoFi, you see these pumps, which are great, especially if you're a trader. Right before and right after earnings, and then it just dies off. If we're at 75%, which is a long time from coming, institutions will start a position and typically they'll add to it as they see good things, or up to the percent or the amount that they want. There's different strategies. But if we were 75% institution, you would see a pump, sure, and you might see a dump, but it's not going to be nearly as much that a lot of those gains will really be captured. So if you're a long-term investor, you want to see very high institution investment. If you're short term and you just want to trade, you want the toots to stay away. So,
yeah,
I have an idea. Have you guys clicked on Grok on Twitter?
no, I haven't really.
So I
touched
just
it at all.
clicked on it, and it has something that it will roast you and be vulgar. And I just clicked it, and what it wrote to me is so hilarious. Oh my God, it is so funny.
Great contribution, Steve.
Yeah, and what are you getting on? What are you getting at?
I think we should all click it and read what it says.
Oh, dude, I'm okay. Jeez.
I think Elon's engineers need to do a little bit better, but it is pretty funny. I will give it that.
Dude, just when I think to myself, this pod is getting some credibility, as like there's actually some serious takes happening on this pod. It's just some shit like this happens.
Yeah, this is
chaos.
why.
This is why
I
we
wanted
can't
to
have
ask,
nice
by the way,
things.
Roy, you're a Robinhood shareholder.
mm-hmm.
Noto just had some recent colorful comments about Robinhood needing to potentially slow down and that they need to not get ahead of themselves and stay in the lane of brokerage. What did you think about that? Do you think he's kind of trashing on them for going out and acquiring a credit card company? And
I mean, he is, and he's starting to see that they. Well, the thing is, and I've talked about this before. Robinhood seems to do well at things that SoFi doesn't, and vice versa. They're very different companies, but like if they could ever combine together, which they won't, that would be like the dream. They would kill everybody. Like no other company would exist. Not quite, but I mean they would be phenomenal. But seriously, what X1 was purchased for is like 70 something, 80 something million. Is like nothing. Robinhood has a huge amount of cash and no debt. I don't know. X1 I'm not like particularly bullish on, frankly. I think it might be a nice product. They've did some teases either early this week or late last week. So they're doing something with it. They've integrated some Robinhood and stock type rewards, crypto rewards too in the past. So we'll have to see what they come out with, but that's not why I'm not even an I'm a trader really in Robinhood. I'm degenerate.
sure.
So I'm just in this, maybe through the end of the year, January, February, something like that. I'll be out before the end of 2025, barring something unforeseen. They're a good company. I think they have a long-term story. I just see some unique confluences of events hitting them in 2024 that even is not the same for SoFi. And I'm bullish on SoFi. By the way, if somebody's like, hey, Robinhood's better than SoFi, the only name that I've been adding every week for like the last 6 or 7 weeks is SoFi. I bought
The only name.
Yeah, only name. Every single week, SoFi. So since like the first 2 weeks. So
Yeah, I bought this week as well.
I did
Tanner,
also.
Did you guys buy?
I
There
bought
you
a
go.
different name.
I
Tanner,
bought Tesla also.
I know you want to talk Nubank, but
I won't go on the rant about Nubank, but Nubank is now a larger fintech position in my portfolio than SoFi is.
those earnings were really good. And I mean, it sold off. Like
Underappreciated.
the market didn't, the market's going to do what market's going to do. So, I think Block reported on the same day. Block was all right, really good guidance, okay earnings. They said the right things, and it went up 17%. I'm like, that should have been Nubank, honestly. So
I don't know if we want to talk about this. We can totally veto it and move to something else. But this week's been such a long week that it's hard to remember. But on Monday, Capital One made a move to acquire Discover in an effort to consolidate in that credit card space. The credit card space is one that SoFi also contributes in, albeit it's a smaller contribution overall. Do we want to add some thoughts at a high level around this, or do we want to skip this as a topic, or maybe leave it for the after hours?
So I'm definitely happy to share my thoughts on it. I just think it's weird that a lot of people are talking about this as too much of like a monopoly and not enough as kind of taking away from the duopoly that is Visa and MasterCard. It's not like Capital One is doing something that doesn't exist. Look at American Express. American Express already has an ability to have a card network and issue their own cards while having a bank license. That's what Capital One's trying to do. And now people are saying, oh my God, if this happens, like, nothing will stop Capital One. It's not true at all. This is a massive blow to MasterCard. They're their third largest client, which, by the way, just to put into perspective as well, that just because that they like a company acquires a new technology like Discover Financial Services does not mean that they can pour over every single one of their cards onto this technology without scale that might take years and years and years and years to get to. So you're going to see small bits, in my opinion, of Capital One going over to Discover, and you're probably not even going to see that in the next 12 to 18 months.
Well, so I ran a poll on my Twitter, and basically made a very short case around like, is this positive or is this negative for SoFi? I personally think it's going to be a very, very low implication, like pretty much nothing. Similar to how it was when, Credit Karma, was abandoned or was moved to whatever it was moved in January. And SoFi Relay would see some of those users. Like, it's inconsequential to the grand scheme, but it's still something that has some type of effect. And that poll the majority of the votes, about 57%, were like, I don't know. And the of the remaining 40 some odd percent, the winning vote was that it would help SoFi. I think where it would hurt SoFi is just Capital One having so much more resources as a consolidated play. I think now it's like the sixth biggest financial institution, something like that. But I think where it will help SoFi, and I've been thinking a little bit more about this, is that there are probably a lot of users at Discover that are going to have their service change, that are going to have maybe different services with Capital One, or at the very, very high level, that are not going to be a fan of the consolidated product offering after Capital One acquired them. And those people are up for grabs, essentially, or will be up for grabs over the next 12 months, so as to potentially bolster SoFi's credit card business or something to that effect. The other aspect where it could potentially help SoFi, and I know Steve doesn't like this, but it does direct more eyeballs to M&A attention in the space to further consolidate. I mean, Elizabeth Warren was immediately on this thing to say like, oh, they shouldn't be allowed and this and that. And, my point is, it's something that makes waves. And when you make waves, people can very easily go one step further to associate, to say, okay, well, what else is in that industry that is, undervalued or so on and so forth.
One of my favorite comments there was that the original fintech company bought the original credit card. Fintech is winning.
Yeah, I mean, I don't think this does anything to SoFi at all. It's so nominal in either direction. SoFi really doesn't even have a credit card business, and for the personal loan businesses and the banking side, I don't think that it's that consequential. If this is bad for American families or whatever that Elizabeth Warren said, because potentially Capital One can increase margins and not be as lenient to the average person, that just goes to bolster a SoFi offering even more that is hungry for new customer acquisition. So, and yeah, I was so shocked to see such a sizable M&A, by the way. I think the week before, I was like, yeah, I can't see anything happening with SoFi. There's not a lot of activity right now. Boom, one of the largest M&A transactions in a very long time. So I personally like that. When markets make big plays, that's when stocks get exciting. How cool.
Yeah, that's the one area I can see that's a wild card that we talked about before a couple of months ago. SoFi being bought out potentially. None of us really, would be thrilled by that, but if it happens, we'll all make a lot of money. So it's like I'm not going to be mad. I wouldn't rest my hopes on that. Don't invest for that reason. But when you see a major acquisition like this happen, and regulators not do too much other than just make some noise, that opens the door for further acquisition, just like you said. So that could be a beneficiary there.
And bringing it back for a second to the credit card aspect, I think Damon nailed it. Read my mind exactly. I just want to see a SoFi refresh on credit cards. We know that in the last earnings call, Anthony Noto mentioned, and they also mentioned in their release, that they were spending something like $100 million in getting these products up and running. Credit card is one of their segments under the financial services aspect that is not profitable. I think, Tanner, keep me honest, but I think along with SoFi Money,
SoFi Invest and SoFi Credit Card are the two. SoFi Money is the only thing that's keeping the whole segment.
Invest is the one I was thinking about. So the brokerage side. So my point is like they have some work to do on credit card. Credit card seems to be, from a profitability perspective, a low-hanging fruit for SoFi, let alone, expansion and members and all that stuff. From a profitability perspective, like operating leverage point of view, credit card is an area where SoFi can see improvement. And this consolidation in the credit card space specifically, made me think about that, to say, okay, well, if it's going to affect SoFi positively, how early on can we see that reflected? And if it's not going to affect SoFi positively, what is SoFi then doing to counteract this new move in the market that's unforeseen?
Steve, anything to add on what we've been saying? You're quiet today, my friend. You need to get energized. Where's the double espresso, the quad shots? Where are you at?
Starbucks.
Dude, I'm still drinking coffee.
Cool.
I don't think this matters for SoFi, to be honest with you. I think it's a nothing burger.
Coffee.
I know I'm impressed that you're drinking coffee also.
Yeah.
And you're
If
flip-flopping on the Celsius, going over to Starbucks. Are you getting paid dividends too, Tanner?
no, have no Starbucks shares. If the girlfriend has a buy one get one half off, it's like she has it in her mind that like that's a deal now. So like she's saving money, even though she's going out and spending $20 on coffee. But I'll drink it.
I
I'll drink
mean,
it.
why don't you benefit in the process and get some Starbucks?
I don't like the company. I think that they're not what I don't. This is an after hours conversation. I'll just quick because I'm already on it. I think that Starbucks is not what they were 6 years ago. I used to go there back in the day and ask for little
Dude, you're like
add-ons and stuff like
25.
this.
What do you mean back in the day?
When he was 23.
Yeah.
That's what he
No, I
means.
mean like 5-6 years ago. I remember going there and I could just customize my drink and they'd be like, yeah, and with great service. Now it's like you ask for less ice, they charge you.
You were one
Let
of
me
those
finish
people-
the sentence.
After hours.
This,
After
when it comes to that, don't even tell me that.
After
Listen,
hours. Let's do. We got 10 minutes left, guys.
If you ask for less ice, if you ask for cinnamon, if you ask for any of this shit, okay, they charge you extra. It's getting too money grabby, and people will go to other options like Dutch Bros. End of story. Okay.
I have thoughts on that, but I'll just share them
After hours.
After hours.
I have thoughts on that also.
Tanner
Yeah.
drinks Folgers.
What's do we have a last topic?
Yeah. The last topic. Tanner actually drinks Maxwell House. Okay, because it's the cheapest, and I make my 20-cent coffee at home.
Dude, just
Yeah, I don't mind that. I'm just saying Starbucks is pretty good. And if you're buying Starbucks, you might as well get some dividends. That's all.
Devis, take it away.
Well, I don't know what the last topic is.
I've got one. So it's
Nubank.
sentiment. Oh, no, not Nubank.
All
Sentiment. So right now, like if you, it's not the lowest I've seen with SoFi, but it's fairly low. If something happens and SoFi's trading back in the sevens, which is very possible this next week on a pullback, general market or just banks are weak or whatever, you're going to see a lot of sour sentiment on X or whatever platform that you use. You just will. And this week was a really good reminder. The last week and a half, just how fast sentiment really can turn. And of course, sentiment is basically built on stock action, on stock price action. So if the stock is going down and falling off, like PayPal, it's terrible right now. It's probably at the all-time low that I've seen it as a PayPal investor, even though the stock's not at the all-time low. SoFi is pretty far down there. And I do see a lot of people that are SoFi shareholders that are frustrated because they're seeing other fintech companies, not just AI, not just semiconductors, go on these great runs. So, of course, Block did quite well this week, phenomenally well. Robinhood last week. We saw Affirm, of course, late last year. And it can be frustrating as a shareholder to be like, why is my stock not getting any love? They're having these killer results. If you continue to execute, things can change in a hurry, and sentiment changes ridiculously fast. So Robinhood's the one that I know the most. Robinhood back in November was despised and hated. People were talking how it's going bankrupt, which is like it has no debt and it has like $7 billion in cash. But okay, we'll pretend that. It was a load. No matter what you said, no matter what thread I wrote on it, I didn't write too much on it. Just a lot of backlash and negative feedback. Now, this week, like it broke into the 14s. It's flying up. It was flying after hours. It shouldn't be like it. I think it's still slightly undervalued, but the sentiment is turned. And now you post something in Robinhood, they're like, wow, I've never thought about this company before as an investment. And how high can it go? Can it go into the 30s? I was like, I actually think it can. It's just not likely. I think that SoFi will. I'm can never guarantee anything, but I am almost positive SoFi will have that. I can't guarantee it that it is this year, but there is going to be a time when instead of this negative sourness, no matter what, and people are like, SoFi's a loser and this and that, why don't you invest in Bitcoin or what have you? I mean, maybe you should. But me personally, I'm going to continue to hold. They're executing. I know sentiment just follows a price action, and we'll see the other side of this too.
It's crazy how fast the stock prices can turn around.
Mhm.
Even for PayPal, you look at Square, like you said, look at Robinhood, look at Shift4. These companies, in the matter of single quarters, doubled. And whenever they were being held down that low is where sentiment's the worst across retail, especially where people were going, yeah, no, Cash App's the number one finance app on the App Store. And, Steve's on the podcast saying Palantir is going to do better from $17 when Cash App was down at 40. I mean, that's not going to be true.
We got some time for that to play out.
It will be true.
It was October 13th. I won't forget it. So
Okay,
currently Cash App's winning by a large margin.
We said a year, right?
Yeah.
Okay.
October 13th, 2024. That's what you have till.
So let's bring it up. Hold on.
I'm with Steve on this. Like, it's not just because I'm a Dorsey hater. Like, I'll give credit. They've done well the last few quarters. Not as well,
Yeah.
I think, as the stock
I'm
price.
surprised that they're up this much. And I'm happy for Tanner because he's a shareholder.
Yeah.
I don't hate it.
This rise is not deserved. But, that's what can happen. Sentiment on the other side. They shouldn't have been trading where they were at before. They were way undervalued. And I say that as someone that does not own the stock. Same with Affirm. It had its moment where it was way undervalued to way overvalued. Now it's kind of settled a bit. Robinhood's doing the same thing. SoFi will eventually do the same thing. And Palantir to the freaking moon.
Can we?
Yeah, I mean, look, Tanner's been right. Since then, Square's up 82%, Palantir's up 32%.
Right.
So Tanner's been right. That's exactly since October 13th.
Tevis is so dismissive right now. He wants to move on.
I mean, over the past year, Palantir's destroying it. But Tanner's been right since we said it, so we'll see.
Tevis just doesn't like looking at the Palantir stock action.
No,
it's coming back down. It shouldn't matter.
I have a SoFi related topic, you fucks. Let's move on to the after hours for these other topics.
Okay, so would you like to cut it early? What do you want to do?
No, I just want to cover the last 3 minutes on just a SoFi related thing, and then we can do the after hours. Sound good?
Yep.
Can you pull up my latest tweet, Tanner?
All of this. Tevis's Twitter.
Oh my God, stop. Did you promote your Seeking Alpha this episode? No?
Your latest tweet is SoFi Weekly Live in 10 minutes.
No, the one before that.
What are you talking about with Seeking Alpha?
So hold on. So SoFi, if you scroll down to the tweet before that, SoFi, the tweet before that one, and then we can lead into this point. So SoFi has this ad right here on the NBA official site. And we just did a similar web search. NBA gets about 70 million hits per month. About 51% of that traffic is from the US. Now, there could be a lot of people using VPNs, but that's like 30 million people. Scroll up, that got me sort of thinking around the numbers and this prediction around SoFi getting 1 million members per quarter. And really, I looked at some of these NBA stats, about 35 million US specific visitors per month in the NBA site, about 11 to 18 million viewers of the NBA finals. This is based on 2023, 2022, and 2021 numbers. So the last 3 years, trailing three, about 5.8 million average TV viewers for a regular season game in 2023. Even the NBA draft peaked out at 6 million viewers for the draft in 2023. And so it really got me very bullish because of the impact that the NBA can have on SoFi's member additions, because that's going to happen this quarter. We're going to see members this quarter that come from this NBA partnership. We're going to see more members in Q2, more members in Q3, and so on and so forth that are going to happen this year as a result of this. And I really just wanted to share some of these numbers because when you look at, tens of millions of visitors every month, tens of millions of viewers, for these individual games, that SoFi is going to be running multiple ads during all of these games, during all of these events. And really, to me, that is the contributing factor. That's an unknown, or it was an unknown when I made that prediction back in December.
Yeah.
And today it seems as though, okay, yeah, 1 million, like you can feasibly put the puzzle pieces together to say, how can SoFi get there? And I guess what I said in my tweet was, I really view that as a call option on SoFi as an innovative company, to know that I can make outsized bullish bets, something that might seem far-fetched in the moment, but I know that the company will innovate and introduce new offerings or new partnerships or new product lines to eventually get there. The NBA is just an example of that, but there's multiple examples of SoFi that does not just include them sandbagging a quarter, then triple beating. It actually includes them, releasing a new product line or a new partnership or a new, Galileo, whatever API connection, whatever it may be, and they're eventually getting to those numbers. And so I'm right now, I know I can't stop talking about this NBA deal, but I truly think that it has the potential to be a really huge contributing factor to making SoFi a
Is this
million
true?
members a quarter. Yeah, exactly. It's on the sticker. So some people were saying this on the live games. You could see the SoFi sticker because it's virtual signage. And when you clip some of the live games, you can see it. So in some of the clips, you can see it. But when I think it's the NBA official that's retweeting it or the team account that's retweeting it, sometimes it doesn't appear. Sometimes it's based on certain television, like NBC versus whatever, CBS versus all of these other ones. Sometimes it doesn't appear. It appears live in the moment for the viewers watching the game. It also appears in some of the clips depending on who's clipped it and how. But a lot of these official replays that people share online don't include it, which is kind of a bummer. I agree. But I think still the overarching point is the NBA is something that we weren't predicting because it was an unknown factor back in December. And just the fact that this company can do that to now make sure that we can get closer to even those most bullish sentiments, what we thought was previously outrageous, I think that is a key success trait of a company that consistently innovates. And by investing in that company, you are essentially placing a portion of your money on the call option on the future products that they're going to release. I've said this time and again about Tesla, to say like, oh, well, I'm buying Tesla shares because it's like a call option on Elon's brain, because they can release a robot and that robot can be bigger than the car business or whatever it may be. Similar story with SoFi, right? All of the products that they have not released yet, that is alpha, of you investing today versus tomorrow.
And there's a comment there, Sagig72, the Kathy podcast, they talked a good bit about this, that usually when Kathy would see a company buy naming rights to a stadium or an NBA or something like that, that's a good time to sell. But they talked about why that's not the case. We talked about it before, not to rehash too much, but it's all about that name recognition and trust. They're doing a phenomenal job on this, where Noto mentioned that when he first started, I think they ran some surveys and they'd take 100 people on the street and ask them to name a financial institution, and maybe 2% would say SoFi. Now, like if you bring up SoFi, like, oh yeah, I've heard of that, or that's a bank, right? So it's a lot of improvement. We've seen the member growth as well, and the NBA deal is not insignificant.
I think he said it's 7% now, but it's very fluctuating. They said they've seen it as high as 11% at one point.
Yeah,
but extremely fluctuating. I wanted to let me play devil's advocate real quick, and then we will pop off. With the what was I going to say? The oh gosh, I just forgot it. It had to do with PayPal. Oh yes, okay, I just remembered. With this NBA deal, a large part of it, and the reason how they're going to try to get new customers is with this $10,000 a week bonus that they're giving away, which is not a lot of money for SoFi to do, like, at all. So don't worry about that in terms of customer acquisition cost. But Roy, I wanted to pitch this question. Do you think that this is kind of running into a little bit of a PayPal issue, where they went after every and all customers with no real idea of if those customers were going to pay back that customer acquisition cost? Like in a way where we're just getting people to sign up. They don't need to make any purchases, deposits, anything, just signups for the sake of members, where potentially they might not even know what we offer or what we have in store.
Yes, just kidding. It's no. There's I don't see that at all. PayPal had no concrete vision that actually unified them. They did mergers and acquisition very poorly. They were really actually concerned about the customer count, not the actual numbers, what the customers were doing. That's shifted, thankfully, under new management, and that's been a really good change. SoFi, while they certainly do pay attention, and they need to because they are mostly a bank on the customer counts, that's not what they seem to be most focused on. Any interview that you see them talk about, they're not talking customer counts most of the time. It's very rare. It's if there's a direct question on it. And so they need to cover it. They need to talk about it. It is a part of their thesis. But the other thing, too, is you can live without PayPal, just to be honest. It's a great business. They've done well historically. 25% of e-commerce worldwide runs through PayPal. So they're not dead. They're not gone. But if you're like, hey, I hate PayPal because of what they did to Canadian truckers, then you can get around without PayPal. SoFi, yes, you can get around without SoFi, but you need a bank. Like everybody needs a bank. You don't necessarily need a physical one. So if somebody is, signed up there and they have that on the side, they might not take it seriously, do direct deposit or anything, but it's a whole lot easier to transfer assets and to get set up, change your direct deposit over once you have that initial agreement. So I don't think that this is in any way the same thing. Plus, they have such a range, mint and suite of products that maybe a person doesn't want to make SoFi their primary bank, but they, for some crazy reason, love the Invest platform or really like the credit cards, or they sign up. Relay wouldn't be too huge, but they're like, hey, let me check out the home loan business with SoFi. So that can lead to some good things.
Before we go, Roy, can we get you? Can we get you to promise to buy a new mic after this episode?
Yeah, I probably need to.
Ladies and gentlemen, that's been the SoFi Weekly. We're coming up on 50 or 52 episodes soon. No,
what are you saying? Last week I posted number 73 of the highlights.
Really?
I don't know what you're saying. We're like over 70 episodes, and that's because I also missed a couple. We're probably at like 75, 76.
Why didn't we do a yearly special?
I mean, I don't know. We can do it
Mistake.
this year.
All right. I have a really, really great content idea I want to share with you guys. I'm going to disclose it on the after hours, but let's jump on this because I think that this could be a lot of fun. Ladies and gentlemen, if you want to join, make sure you guys hit the join button down below, either on Tevis or my channel. You can hear the after hours. It'll be up tomorrow around noon. I usually forget every time, and Tevis has to message me. Thank you. Bye, guys.
Thank you.
I don't know. Bye.